We're going live. We're good? We're good. Ladies and gentlemen, IPOs. Are we in a tech bubble and beyond $200? Modesty at best, I tell you. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Let me just fix that real quick. Just going to fix the webcam. Okay. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. It's kind of funny here. Feels like, are we in a real tech bubble right now? And it's kind of funny to bring this up, especially after some of the phenomenal calls we've been sharing with you in the market. Listen to what's going to happen next, in my opinion, and that is going to shock the entire industry. Before going into that, by watching this video, you are agreeing to hold me, Mark Melnick, and T3 Live, harmless and not responsible for anything that might be seen, shown, heard, said, thought, dreamt, felt, smelled, period. If you don't agree to that, leave. By continuing to watch, you are agreeing automatically to those terms. So it was kind of funny. I mean, I've been talking about the market and how we're in a real bubble over here. And I think one of the things that a lot of people don't understand, which is kind of funny because it happened a long time ago, as a trader back in 99, you have to realize it took less than 3 years for the triple Qs to go from $120.50 to $19.76. I've watched the Qs literally lose 90% of the value 90% of its value over the course of less than 3 years. And when you see some of those things that were evaluated back in the day, like all these companies, all these tech companies that are out of business, that were just valuated so highly, you looked at it and you were trying to justify it. And there were some people that you heard of who were just shorting the market, shorting the market. The Nasdaq went to 3,000 and they were shorting, and then it went up to 3,500 and they're shorting, and 4,000 and 4,500, and they just got wiped out. What I'm saying has a lot of relevancy to what I'm going to show you tonight, which every Wall Street analyst out there is not only laughing at my price target now, but will laugh even harder after they see how I feel about it. With that being said, there is an IPO bubble. Now, I want to explain exactly what I mean. If you're going to click off this video and say, oh, Mark said it's a bubble, short it now. I mean, if that's you, see ya. You're not going to be hearing me now anyway. But I'm going to explain so there's zero confusion of exactly what I am implying to myself personally with these words that I'm going to share. But first of all, let's look at some of the IPOs that have been inside this volatile market. We have Revolve Group. Look at that. Stock opened up at 25.16, closed at $40.87 7 days later. Uber, most hyped up thing, dropped on the first day, dropped on the second day, rallied from 36, even hit as high as 45.75, and literally made all-time highs again since the IPO day. Nobody talks about that really. Then you have a new company that uncovered negative information about negative information that Russia was hacking into the DNC, and this is actually the company that brought that to the light of the American public and the government. This was the company that did it, so it has fame. Stock opened up at 63.50, fell to 56, hit $70 today for the second day in a row. Okay, I'm going to prove it to you. Here's Fiverr. What they do, you go on, you pay someone for a project, opened up at 26, hit $44.25. What I'm about to tell you after this is even going to blow your mind further. Lyft IPO that I was phenomenally bearish on, rightfully so, before they IPO'd. 87.24 got down to 47.17 and even started rallying now, breaking out of a algorithmic resistance line for the first time pretty much since its existence. This is the most major descending resistance line that you could draw currently. It's a new stock. This is the one with the highest conviction, and it just literally broke out of it today. Then you have Chewy, dog treats, opened up at 36, got to 32.67, trading at 33.70. This is the one. Now you have Zoom, ZM, stock that opened up here at 65, hit as high as $105.99, closed at 98 today. Then, of course, you have PagerDuty. If you were watching the NBA Finals, there was some dude wearing a green shirt sitting in the very front, like courtside, and he had a shirt that said PagerDuty on it. I'm like, oh, that's probably the CEO of PagerDuty. But PagerDuty, another new IPO. Again, I'm taking really stocks that haven't been out too long, month or two, a week or two, a few days even, and everything in between. You want to know the funny thing about every name I just showed you? It's screaming that this is a buying opportunity. Why? It's going down because every IPO is getting hyped. It's literally, we're in the midst of a tech bubble that's at least a month and a half, 2 months old. I would say that at least a month and a half, 2 months old. It was hard for me to realize it, and I'm going to explain even further why I feel this way, and so much more. Just looking at this and looking at the valuation of some of these companies, led me to believe that people and analysts are going to get run over similar to how they got run over in Tesla when they were maintaining $15 targets and $30 targets. They couldn't wrap their head that you could evaluate a company such as Tesla so large when it just bleeds money and hemorrhages and continues to do so, just like it does every single quarter since the existence of the company. But when you actually, as a publicly traded company at least, when you actually sit there and you look at some of these things, people don't get it. And that's what I was saying recently. I said it in the room and on a video with some of these analysts and beyond. A lot of them raise the price target. Like, I'll give you an example. Like on June 7th, here is June 7th after earnings. Analysts raising their price target to 120 from 97, 125 from 70, 105 from 85 at Jefferies, but the stock opened up at 129. They all gave it lower price targets than where it opened. Then JP Morgan came out on June 11th, right over here, the infamous Beyond losing a third of its value. And then JP Morgan comes out and downgrades Beyond to neutral on balanced risk reward. Hear this out though, balanced risk reward. He raised the price target to 121 from 120. You want to talk about an analyst that has absolutely no conviction, is playing both sides of the coin? This reminds me of the average broadcaster too. Just it's very easy to play both sides of the same coin. It really is very easy. And when you see things like this, he says the stock at around 168 requires assumptions we're not yet comfortable with. The analyst believes its risk reward is balanced. However, he remains highly favorable to the total addressable market for alternative meat and Beyond Meat's role within it. Further, he still thinks consensus estimates for both sides and EBITDA are too conservative. Like, they're playing modest. They're playing like under promise, over deliver. Wow. You mean if it goes up, you're right, or if it goes down, you're right, or if it goes sideways, you're right? I'm going to give you a price target. I'm going to give you a price target on Beyond Meat, $320. Yes, coming from you live to theaters near you. The same person who was saying $200 after they reported earnings when they were trading at 116, 117 after hours. I put a $200 target. I think there's a good chance it hits $200 tomorrow. Tomorrow. Like tomorrow it hits $200. I gave it to you recorded on June 7th. I am raising the price target beyond that, pun intended, to $320 on, basically looking for a $20 billion valuation on the company approximately. This is a tech bubble. People look at Beyond Meat. How would you want to know how I classify Beyond Meat? This is a tech bubble. This is a tech stock. This is a tech stock. You want to know what probably figured out the formulas and the artificial intelligence to make the meat taste a certain way? You think it was some dude in the back of a kitchen just sitting there putting together pea protein vegetable patties and I'm going to put a little of this, a little of this, a little of this, a little of this, and wow, I have 50 ingredients in my healthy Beyond Burger. Wink, wink. You think like that's what happened? Do you think that's what happened with Beyond Burger or Beyond Meat or Beyond Sausage or whatever alternative meat products they have? No. This is a field of pea protein. Definitely, definitely genetically modified, which is done by technology. Definitely using chemical fertilizers, which is done by technology. You want to know the funny thing about every burger out there? It all tastes different. Real hamburgers, the meat always tastes different. Why? They're different animals, for lack of a better word. They taste different. You notice something about your Tropicana orange juice? It says 100% juice on the label. But if it's 100% juice, how on earth does every single Tropicana taste the same? You ever stop and think about that? Considering there's billions of oranges and it tastes the same now as it did 10 years ago, 20 years ago, yesterday, last week, for next week. It'll all taste the same. You ever wonder why? Because in the US, when you label something as 100%, you don't need it to be 100%. I think you need it to be like 90, 94%. The rest is an additive that they put in your 100% freshly squeezed orange juice that makes it taste identical to everything else. Tropicana is not just a bunch of farmers on a huge plot of citrus trees, picking oranges and other fruit, squeezing them into, your bottle, and then just shipping it out. I mean, that's the sort of mentality it brings on. Beyond Meat is a tech company disguised in the guise of food. That is what Beyond Meat is. It is a tech company. You ever see the Microsoft, again, the artificial intelligence commercial with the woman in the Carlsberg beers saying, yeah, Carlsberg could produce a new flavor of beer right now, much quicker now than we were before. It used to take years to create a new flavor of beer. Now they could do it in whatever, minutes or whatever, using artificial intelligence. It's a tech company. This is tech company. Now, why am I saying it like that? What is the importance of these price targets? Well, again, I've probably I have probably seen the worst things called to me in my life when I had the video. Some of the messages are gone. I'm assuming T3 deleted them. They were vile. I don't touch them. I just read them and I'm like, whatever. But off this stock calling for a $200 target, people went ballistic for some reason. It's almost like the whole thing went viral. I didn't even understand it. It created such an outrage of emotion. And that is why I'm going to explain why we are in a bubble. Back to the bubble word. We are in a bubble. When people start getting emotionally defiant about a stock, the statistical environment changes. You want to know when I really first felt the bubble? April 4th, 2000. Does anybody remember trading on April 4th, 2000? Anyone remember that day? Does anybody remember the day April 4th, 2000? Am I taking you guys too far back? Do you guys want to see what April 4th, 2000 looked like? And why, to me, what's happening now is like the closest thing I've ever seen to that bubble. And people are like, wow, that's a pretty bold call, Mark. Everything in the economy is great. Everything is good. Jobs, this, that. You'll point to bond prices, yields. You'll point to everything. But what you're not going to point to is the feeling, the psychology, how it felt like when these bubbles were actually happening. How do you quantify that? How do you even talk about it? Most people don't remember. I'll show you it. Okay. Oh, did I find it? Where's April 4th, 2000? Oh, okay. Here. Okay. This is a chart of the triple Qs. This day here is April 4th. Oh, that's April 12th. This was April 4th of 2000. The first time to me, I was like, something weird is going on. Something completely changed that was never there before. The high of the triple Q is 103.94. The low, 88.31. That's in one day. The Qs dropped $15.32. Now, the important thing to note that day is back in the day, if you were watching CNBC, you might have seen something scroll on your television saying curbs are in. Do you guys remember that? Curbs are in, curbs are in. They would prevent certain buying and selling with curb orders when the market was up or down. What was the number when curb started coming in? 2%? Was it 2%? I'm trying to remember the exact number. But every time the market goes down that much, they cancel all sell orders. Like the computer derived sell orders. They canceled them all. And then they would open up and let the market stop think and then go on. And it just kept dropping and dropping and dropping, only to absolutely explode back up again before having one of the April 12th, 2000. High of the Q is 98.75, low 63.13. But the first day it happened was April 4th. So I've seen the market lose a third of its value in a day. In terms of the triple Qs, I mean, we're talking like triple Qs. And there were people, when you would talk to them about some of these companies, there were the old schoolers. I'll tell you right now, like, because and I'm going to share the story, and it's going to sound exactly about what I'm about to tell you, and it's going to show you at least psychological evidence and statistical evidence that this beyond, however you feel about the company on a fundamental basis, is irrelevant. And I'm going to show you why. So, on a beyond right here, back in the day, it used to go by other names. Remember Excite? Remember Vertical Net? Remember all these tech companies? Remember $400 Yahoo? Does anyone remember that? All these companies were just massively, massively, massively valued. And there were some old schoolers, people who've been in the market since the 60s and 50s and 70s inside the office there. I was at the ING building in 57th and Lex. And there was some of those old schoolers there, and they would sit there and they were holding their slow and steady growth stocks that were like the sure bet thing, and they were angry every day. They just couldn't wrap their head how these stupid tech companies were worth more than the companies that they've been buying in the 70s and in the 80s. They just couldn't understand why some of these companies were being valued so much more. And then when they felt that way, the market went higher, and then some of them would be brave enough to short some and try to take a short, and the market would go higher and higher and higher, wiped out a lot of them, shorting that environment, ripping up only at the dead tippy top to just finally say, boom, I'm selling off, and just plummeted in the way I showed you. I mean, literally, the Qs went from 120.50 to $19.76 over the next 2.5 years from that moment on. The market lost 90% of its value on in terms of the triple Q's ETF. And I will tell you, a name like Beyond, analysts have this one so wrong. The fact that I'm talking to people in the room right now, they're like saying their burgers are great and saying they're horrible and they taste like plastic. 52% of the current float is estimated to be short interest. Thank you, Eric, for that. 20 million shares in active circulation and nearly 11 million are short. You know what happens to a retail buyer when they are short something like this and the stock rips up? This is the classic short squeeze during the hottest IPO market that I have seen in a while, in a long while. If you are looking at this beyond and you are making the argument that other companies are going to compete and other companies are going to do that, people are buying this stock. I'll explain it to you. And again, where all the analysts have this wrong. I know my initial $200 target hasn't hit yet. I get that. I get that. I get it. The stock exploded when we did that target. I get that we've not even hit 200 yet. We hit 186.43. And now, after hours, as I talk more about it, since this episode even began, look how valuable this episode is. Stock went from 180.56 to 189.49. Okay? As we're speaking, this is the live chart now of Beyond. Right over here is the beginning of 7:30 to 7:35 p.m. Right over there. Right over there. How do you like that? But to go on and just really explain to you what's happening, these analysts are buying this company as if it is a tech company because the bottom line is it is a tech company. And if you want to invest in hemorrhaging Tesla only to watch it to go from $20 to 400 or whatever, some obnoxiously high price, right? If you're buying Tesla and Tesla, oh, I see a Tesla there, and I see a Tesla there, and I see a Tesla there, and where's your local charging station? I know some of you guys in San Fran, they're like, Mark, just 2 blocks to the left, and there's another one 3 blocks to the right. Gotcha. Okay. You know what? Most Americans cannot name where a charging station is anywhere near them. All right. Most people are plugging these Teslas in to their home and they hemorrhage money like nobody's business, and they're still being evaluated on the potential that your gas guzzler is going to be extinct like the fossil fuels created by dinosaurs. Pun. Beyond is being bought for the potential customers that are going to want to invest in their product because if they do it, they'll be able to expand. They'll build new facilities before you blink. Heck, they're even building a new facility right now as we're speaking. Beyond me. They're building a facility right now. Right now, they're building a facility. Right now, where they're building a facility. So with that being said, like in a Beyond Meat here, I don't see any reason why it's not a $20 billion company. Whether you believe in the fundamentals or not are completely irrelevant based on the emotional outpour. It's kind of funny because I probably couldn't come up with this conclusion if people weren't trolling me when the stock was $114 here. I mean, watch the June 6th Newsbeat show. The most negative attention I've ever got. It was really negative when we called the bottom of the entire market the day before, saying exactly how we're going to do it. Remember right here on Sunday night before Monday open with the market gapping down, saying we're buying it at the close and we bought in positions here. Yeah, that got negative, but nothing was more negative than Beyond Burger. And when I see negativity and I see positive, really positive and really negative thoughts, it means just one thing. From a psychological perspective, people have become emotional to the stock. This stock provokes emotion. You want me to prove it? How many people hate Beyond Meat? That's such a strong word. I don't, but I'll raise my hand to show an example. How many people dislike Beyond Meat intensely? They don't like the name, they don't like what it's doing. How many people is it pissing them off? Yeah, pissing. It's trash product and see? You know how many other trash products there are out there in which you're not even mentioning? But people, you are, yep, exactly. It has driven such a negative response where you have so many people rooting for it. You have over half of the short float getting crushed. They're going to keep getting crushed. And people don't know how to valuate it. There is no wrong valuation for this company. It's a $10 billion company approximately. You're telling me it can't be worth 20 billion if they get a bunch of new customers and a multitude of new orders for their pea protein product? They are being valuated as a tech company, and they should be valued as a tech company. And whether you like the stock or you hate the stock, my personal feelings is $320. And I think there's, again, I think we're going to, I think you're going to see that $200 target really, really soon, maybe even tomorrow. It would have to get like downgraded throughout the week by some analysts in order to hold it back temporarily. I'll use that as a buying opportunity. But looking here at Beyond Meat, just all the charts and just what it looks like on the daily, that beautiful bull flag, and everybody's so emotional on it. This is the perfect recipe. This is what I call the perfect storm. This is the perfect storm for a short squeeze. It's so obvious to me. And I know it might have not been obvious to you, but look, I'm the same fool who called a $200 target here before it exploded. 70 points. I'm the same fool who's going to tell you you're not going to evaluate this thing fundamentally. If you're looking at it as a fundamental packaged food company, if you want to start comparing this to Tyson and so many other brands, you know how much of Tyson's brand is in meat? You think they're just going to be able to copy and just hop on board? No, they're like second comers. Beyond Meat is the Facebook of the social media industry. That's what it's like. Beyond Meat is the Facebook of the social media industry, just like Bitcoin is the Facebook of cryptocurrencies or the Amazon of cryptocurrencies, and Beyond Meat is the Amazon of this pea protein or this, excuse me, alternative meat market. They are going to keep developing further. You think that's it? You think that they make this patty people like and they're just done? They're like, all right, we'll sell to as many people as we can. Don't be delusional. They are going to create new meat products, new substitutes, new alternatives, and they're going to be dumping millions and millions and millions of dollars into it. And they're going to figure it out. They're paying for research and development, just like a tech company. They're going to become, they're going to use science and technology to constantly improve what they already have because they know the heat is on. And when so many companies are going to start trying to compete and ramp up their business, 52% short float. Thank you again. That's 11 million shares nearly short out of the 20 million active in circulation. Somebody's going to get squeezed. Shorts are going to have to cover. Margin calls are going to be coming out, and that's going to push this stock above and, pun intended, beyond. What if I told you that there was a new strategy that we're doing here that traders are finding up to 100% consistency with? Low risk, easy reward, nice gains, big moves. And what if I told you that every single day, since even after it started, since after we talked about that $200 target, every single day since then, you could have executed upon a Mark V strategy and it would have worked every single time. Mark 5 strategy is exclusive to Newsbeat Live members, but that's okay because for $49, you can be a Newsbeat Live member. You could hear me go over all these IPOs and more. You could hear me share what my next favorite IPO within the bunch that I just named between RVLV, Uber, CrowdStrike, Beyond, Fiverr, Lyft, Chewy, Zoom, PagerDuty. We're going to be going over all those names and so much more. Again, that is exclusive for Newsbeat Live members. I hope you guys enjoyed the Newsbeat Live show. Happy trading, make money. And I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful, wonderful evening.